Hi, and welcome back again to Tim Bigham's Big Time Options, Edges and Hedges. Taking a look today, our most recent trade idea, an Apple put calendar to take advantage of a overbought and overvalued Apple stock that is finally starting to show a little bit of weakness here, and how we're going to look to make money by continuing to chop wood with this put calendar, able to sell weeklies against the longer term traditional June puts, all the while being slightly bearish. So let's jump in and take a look. First, as we always like to do, we use our fusion approach, taking a look at fundamental, technical, and probably just importantly, IV analysis to help structure the trade. So from a fundamental standpoint, here you can see I pulled it off Apple, the price to sales and price to earnings ratio, right? You can see on a 5-year chart, price to sales again reaching towards the loftiest levels we have ever seen on Apple, nearing 10 times price to sales. Previous 2 times did not bode very well for Apple as far as stock performance, as price to sales plummeted with the stock coming down sharply, right? Price to earnings nearing that 40 times, right? And that also marked a all-time high on a price to earnings basis for Apple. So again, did not bode well for the stock. So certainly things getting a little over ebullient, to say the least. Apple did come out with earnings on April 30th. They did quite well, beat by almost 5%, but we'll see in a second how much the stock rocketed up from then, right? Even on a forward basis, right, for 2027, using the highest analyst estimate, you're still looking at over a 29 times forward PE for 2027. So Apple, from a fundamental valuation perspective, certainly getting a little bit stretched here. From a technical perspective, we always like to take a look at the charts, right? You can see Apple reaching again the most overbought it has been, but finally showing a little sign of weakness, waiting for that curl. MACD got to a recent extreme, starting to weaken. Bollinger percent B got over 100, now well under it, right? Shares still trading at a huge premium to the 20-day moving average as it broke out above that kind of 280 breakout point. This had been a channel stock for the longest time, breaking out. We're just looking for Apple to move slightly lower here to maybe retest that 280 level. And the last time that it reached similar kind of overbought levels on a technical perspective, and this equates exactly to those valuation multiples, right? Going back here, that lined up with the last time we saw Apple at such a expensive point from a valuation perspective, certainly boded ill for Apple, at least going forward here. So the technicals pointing towards a pullback in Apple as well. So we can also take a look at a comparative, right? And here is Apple on a comparison to the triple Q, and Apple is basically the third biggest constituent of the QQQ, right, comprising about 7% of the index. You'd expect it to be normally fairly highly correlated because of such a big weighting, but you can see previous times when Apple here in the black got overextended versus the triple Qs, it always led to a pullback in Apple. We're seeing it happen again here as the NASDAQ is actually headed lower here, but Apple now higher. So we're looking for that divergence to start to converge, with Apple being an underperformer to the NASDAQ, and also with Apple, as we said, getting overbought from a technical and overvalued from a fundamental perspective. IV certainly points towards Apple kind of being neutral, right? We have the normal kind of vol crush post earnings, right? Now starting to tick a little bit higher. Here you can see IV hasn't done much of anything. Apple got a big kind of winger from the IV perspective, like the MUs and Qualcomms and Intels that we saw in our previous videos. Here you can see the normal vol crush post earnings, but now vol is actually a little bit higher than where it was post earnings. So that sets up, I think, ideally for kind of a put calendar spread trade, right? Not necessarily buying or selling IV, right, but just looking to take advantage of the fact that IV will hang out in this range, IV percentile, at the 43 percentile. So not too hot, not too cold, right? Pretty much flat, but gives the opportunity to kind of chop, what as I call it, continue to sell the weeklies against the longer term. So the trade idea was simply going out, buying the traditional June 295 puts, right, slightly out of the money, right, and selling this week's 295 puts, paying around $4.50. Here's the actual trade I did, right? Actually paid $4.35 net debit, right? Would be 7 deltas net short, so just slightly bearish, right? Buying a -40, selling a -33, capturing over 3 points term structure vol though, right? Buying about a 24, selling a 27.5 or so IV. So nice term structure vol as well. Stock was about 298.5 at the time. So again, not looking for a massive pullback. Obviously by Friday, when the short expires, 295 would be the ideal price for it to be, or somewhere thereabouts. But more importantly, a wood chopper, I call it, right? Able to sell, right? The 40 theta here on the May 22nd 295 put, and buy only a -12 theta on the longer term June traditional 295 put. So picking up 28, positive theta, right, which is very nice time decay in your, factor, in your benefit, right? So in your favor, you do have the fact that you are basically taking advantage of the time decay. In fact, you're selling a higher IV than one you're buying. Two gives you a slight term structure volage, means that time decay just a little bit richer, and you do have all these, it's not even weeklies, right? As you can see on Apple, you do have all these short-term options, right? 1, 2, 3, 4, 5, 6 out right now. They'll be adding more, but you do have the advantage of being able to take advantage by selling shorter term options against your long June 295. If the stock just continues to kind of channel sideways here, as we have seen in the past, right, this is a great trade to take advantage of time decay, right? Premium selling, chopping, what as I call it, continue to sell those short-term options, bring in more time premium to decay, take advantage of that term structure being slightly in your favor on a overvalued and overbought Apple that's finally showing a little bit of weakness here, not looking for a huge pullback, but just looking for the stock to drift slightly lower towards that 295 low. So hopefully explains how we go about identifying those trades, take advantage of them, right? Find the edge, put on the edge, do it all in a defined risk fashion. Make sure you position size accordingly, because as we always say, trading is all about probability, not certainty. So until next time, as always, take care.